Hey guys, nice to see you. Can you hear me? Can you please put plus if you can hear me, and another one if you can see slides? Okay, great. Okay, perfect. Nice to see people who were lost. Francis, nice to see you back. All right, guys. Tonight we're going to look at this company. We already looked at this company more than a year ago. I'm just wondering who saw that master class which we looked already. It just if we okay, I remember Nona, yeah, definitely. And who didn't, just put minus. I will know if to go into details about the business. So okay, Han didn't know, didn't look. Okay, Francis. Okay, perfect. Okay, some people didn't look. But that company at that moment was at support levels, and those students who entered the position, they and exited at the top, they made nearly like 20% on the growth. But some of made even more, nearly 100% on options. And that's why tonight I'm going to show the same strategies, practically the same strategies with different strike prices. But just to show, because right now I believe that Disney represents a good opportunity, at least maybe within the next couple of days or weeks. And definitely for your watch list to keep that company. And I know that Norma wanted to get into this company for quite a while already, and patiently waited. I hope didn't enter it yet. And so now it's time probably to have a look at this more precisely for that specific company. Okay, so what's our plan for tonight? As always, we're going to look at current market situation, where we're right now, what we can expect from the market within the next month or so, and then specifically we're going to look at investing in entertainment industry, and specifically on the Walt Disney company. But also I will probably give you a couple other companies to look at on your own already, and you can analyze them separately. I will probably provide you value line reports for them, and but the analysis you'll do yourself. And at the end, we're going to look at possible trading or investing strategies with Walt Disney, more correct name. And then your questions, whatever you have, I'll answer, and then some couple news. Okay, so let's start. Market. That's what we can see, and I presume a lot of traders, a lot of investors, they are waiting when is it going to pull back, and it's like growing and growing and growing and growing. It's like crazy, right? So last in September we looked at it was here at this resistance, and we were thinking, is it going to break through and go further? And look at this, it broke through that resistance, went to the second resistance level, and now it's even higher. So that's last night was the highest point in history of Dow Jones, S&P, and Nasdaq. So and like all these highs every day, it practically creates new highest high. Okay. Now, but if it decides to pull back, where can we expect it? First of all, probably the previous resistance, it will become a support. So it will slow down here. If it breaks through, so if we continue this line, so it's somewhere here, and easily can go to even to 1950. So that's a long trend from 2008, 2009 trend line, and sometimes it goes in a fast line on the top, sometimes it goes in slow line at the bottom. If you break this trend into two parts, so quite easily can pull back to 1950, and that will represent more than 10% drop in prices. And remember that right now, I'm just curious, do you know what's PE ratio right now for index? Roughly? You don't know? Like PE ratio. Who can guess what's the PE ratio for indexes now? So if we in general calculate all companies about included in the Dow Jones or S&P, no, more, nearly 25, more than 25, I think. Dow Jones, I think less than 25, 24 something, and S&P 500 more than 25. So imagine, right? So if we are looking for companies which below 15, So you probably understand how tough to find anything. In average, companies are 25 PE. So some of them, of course, lower, like Disney, for example, but some of them much higher. And just imagine that index, and if in long-term history, if you look at long-term history, you will see that average P ratio, it was 18. I think the lowest point in the history, it was 6, and average is somewhere around 15, 18. So if index decides to go to the same level as average, and PE has to, even the companies are going to make same amount of money as they do now, and the only multiple will change. So people will pay 15 times higher than earnings, not 25 times than earnings. So, but it means that the price of index has to go nearly 40% down. So it will go from 22, imagine, right? So around maybe 14, 13 and a half. So that's would be a huge drop. People will consider it's like a huge recession, downturn, etc. And that might happen even if earnings are going to be staying the same. So that's why it's very important right now to pay attention to the companies which you're choosing. Because even if you choose fantastic, great company, but that company is pricey right now, it's overvalued. So believe it can go even lower. Okay, even if everything in business will be shiny and nice and good, you know. So, but the price will collapse, can collapse. It doesn't mean that it will, but so that's why it's pay attention to your research. Measure it 7 times before you place any trade, and be very careful. You understand that, okay? So that's Dow Jones. S&P. So what we can see about S&P, same story. Okay, so it broke through this resistance line, which we identify, and it was going from nearly 2000, this trend from 2017 February, and it can go even higher. That's the long-term resistance line, so it still has room to grow, and if it goes below that, so that's about 2425, so somewhere in this level. So still, if we look at all indicators, it's overcooked. So based on that, we can more expect that it can go down. But emotionally, the whole US market is so positive about changes which Donald Trump promised to implement. And there are not so many of them yet, but at least they expect that there would be some changes which would be very helpful for businesses. And that's why all these prices are thriving. Okay, and that's S&P 500. And if we look at Nasdaq, similar situation. Also, the trend which started from May, we can see it's at its resistance. It might pull back, or it might break, same as Dow Jones and S&P, and move even higher, which probably can happen also. Now, another like volatility index or VIX, that's what we can see. So when volatility index is low, it means that indexes are high. So, and the best time to buy when VIX is very high. So this point, these points, right? So in this area, we are looking to enter position because that's where the prices are low for companies. And this, when it's at the bottom, we try to stay away and don't enter because it tells us that the market is high. And right now we can see it's quite low and the market is quite high. Okay, so it's general in other index, and we can see that it shows the signs of improvements on technical. So quite possibly it might go up. So it means that the market will go down, vice versa. That's about market. Do you have any questions, guys? If everything is clear, put pluses. And if you have any questions, just ask. Now remember that we look at index just a guide for us, right? When we enter, if you are planning to enter a position within a week or 2 weeks, and then you can see that market is high, and you're looking kind of that it's going to pull back, so it makes sense to wait this week because you can enter it might better prices.